And we're talking about advance tax, the various aspects of advance tax. Do you qualify, for example, and have you missed the deadline? My guest today is Arvind Rao, Chartered Accountant, Certified Financial Planner, and also founder of Arvind Rao Associates. Thank you so much, Arvind, for taking the time. Let's start with a conversation about what advance tax is, and then we'll go into the details as to who has to pay and how it is structured. What is advance tax?
Yes, Alex, and let me make it very simple for you. So, as the name itself spells it out, advance tax is nothing but discharging your annual tax liability in advance or in systematic installments rather than everybody queuing up to pay the entire liability at the end. That's what is in a nutshell. As with most earners go, for the government, tax is the major source of revenue, and they have payments aligned throughout the year. So obviously they'll expect that these tax revenues that they are supposed to get also comes to them around the year rather than everybody paying it at the end of the year. And that is why this concept of advance tax exists, so that people can pay installments at periodic intervals rather than waiting for the year end to discharge the entire liability.
Okay, so you've summed it up pretty well. Now, the thing that I'm sure quite a few of my viewers are wondering is that for a lot of salaried individuals, or rather for all salaried individuals, there is a tax deducted at source. And based on a computation of how much your deductions are going to be through the year, or your investments and your expenses and all of that, you're paying tax on an ongoing basis. So how do you qualify to pay advance tax? Who has to pay advance tax?
This is, Alex, a really interesting one, because every year during the tax filing season, we come across at least three people who are surprised by the fact that I am a salaried person. Was I supposed to pay advance tax? So let me spell it out very clearly here that the advance tax provisions under the Income Tax Act make no distinction between a salaried individual versus a business person. Although practically most salaried people feel that it's only the business people that are required to pay advance taxes. So no, what the provision says is very simple. If the total tax that you are supposed to pay on the total income for the year exceeds 10,000 rupees, and while you calculate this amount, you are supposed to calculate your gross tax liability and deduct whatever TDS has been deducted on it from all types of income, whether it is salary, whether it is any interest on deposits, you name it, and that any TDS that is applicable, you deduct from that. And after deducting this, if the tax that you need to pay is still in excess of 10,000, then you are liable to pay advance tax. So even for a salaried person, who is having a salary income plus who is having some interest income, or for that matter, let's say some rental income, in either of this case, they have to do the estimate of their income, and if and only if they find liability more than 10,000, they're supposed to discharge advance tax installments. Let me also add here that senior citizens who do not have any business income are exempted from paying advance tax. So even if their liability is in excess of 10,000 after TDS, they may still choose not to pay advance tax as long as they do not have any business income in their profile.
Okay, so that clarifies things. Now, another scenario, Arvind, and this is, I think, something that's going to be very common for people that have ridden the wave of the equity markets that started in 2020 March, or after the crash with the rebound. Those people that have booked capital gains in excess of 1 lakh for the year might also qualify for this very, very easily, right?
Absolutely, because whether it is short-term or long-term gains, and I think today both these gains are taxed, long-term at 10 and short-term at 15%. So if this income is, and I think more often than not, salaried individuals do not declare this income to their employers. So failing which, obviously the employer has not deducted any TDS on this income, and all the liability that comes or arises out of these capital gains are going to be the liability of the taxpayer. So for the sake of advance tax, yes, they have to factor these incomes in, calculate what is the amount of tax that is required to be paid on them. And Alex, let me also, since we are on this topic, one common thing that may sound very, what do you say, very, very logical, but I have found people asking this question repeatedly, that when you calculate these tax on capital gains, some people are under the impression that you are supposed to pay taxes on all the gains that are made. So what I'm trying to clarify here for our viewers is that definitely taxes are liable on gains, but while you calculate the taxable gains, you are allowed to reduce the losses that you might have made during the year, offset it against these gains, and only on the net profit or net gains are you liable to pay taxes. So again, I repeat, for the sake of advance tax, calculate these net gains, see if the tax on that at the applicable rates, are they in excess of 10,000? If yes, then pay up. Otherwise, you can pay the liability at that point of filing of returns as well.
Okay. Now, this is something, and you mentioned this, maybe we can make it even clearer. This is something that has to be paid over the course of the year in multiple installments. So how does one know how this is supposed to be subdivided?
Well, the IT Act is quite clear. What they've done is they have clearly laid down these installments, which is typically by 15th June, second by 15th September, third by 15th December, and fourth by the 15th of March. And the relevant percentages for each of these installments stand at 15%, 45%, 75%, and 100%. So to make things clearer, by the 15th of June, you are expected to pay up to 15% of your total tax as advance tax. And likewise, so by the 15th of March, you are expected to pay up 100% of the tax that is due on your income by way of the fourth installment of advance tax. So since the percentages used here are 15, 45, 75, 100, for people who happen to miss any of these installments in between, say for example, you miss the 15th June, or you happen to miss the 15th June and the 15th September, then by December you can even pay 75% of the advance tax, followed up by the balance 25% in March.
Now, there is a penalty associated with missing the March deadline, right? One clarity I think people will want to know about is that if they had liability to pay advance tax, are all the deadlines counted when you're calculating the penalty? How does it work?
So again, a small clarification here, and I keep telling this to people because more often than not, people use the term penalty. And on the income tax side, there is a big difference between the term penalty and interest. So I'd like to correct you here, Alex, that yes, if you do not pay these installments, there is an interest that you need to pay for non-payment or for short payment of advance tax. And the way these provisions work, there is interest that accrues at the rate of 1% per month for every installment. So it starts from the month of June when the first installment of advance tax becomes due. So for every installment that is skipped or is paid short, you end up paying 1% per month on that shortfall amount or on the amount of tax that you were liable to pay for those months. Let me also add here that this is the story regarding interest that becomes payable on these installments during the year. Then there is another provision under the Act which levies interest on non-payment or short payment of advance tax, which becomes applicable from the 1st of April. So for example, today we are on the 21st of March. So in case you have short paid advance tax till the 31st, then beginning 1st April till the date on which you actually make the payment of this taxes due, there is again a 1% per month interest that becomes payable from the 1st of April. Hence, it is advisable that for all those who have missed the bus of making payment of advance tax by the 15th of March, there is still time if they are able to make an estimate of their income and they calculate it on or before the 31st of March. It is highly recommended or advisable to make this payment on or before 31st, because this will not absolve them from interest that becomes liable for missing the installments, but at least they will save on the interest that becomes liable or that kicks in from the 1st of April for non-payment of advance tax.
Okay. I'm glad that that has been clarified. On an ongoing basis, Arvind, where does one make these payments? And now you've missed the bus, certainly. Hopefully, people's liability, if you've missed the bus, is not very significant, and you can correct that, like Arvind said, or you can at least avoid paying the interest rate that will be due post the 1st of April. Where do you, on an ongoing basis, pay this amount?
Again, nowadays advance tax are paid online on the same. You log on to the IT portal and you get the link for which is put up very nicely there. Pay advance tax here. So if you click on that link, it leads you, and I think as we have discussed in the past as well, that these taxes can be paid either via bank or nowadays via debit card as well. So department has been very flexible now in terms of accepting tax payments via debit cards as well.
Okay. I think that is a pretty comprehensive conversation on advance tax. If you miss the bus, don't worry, it happens to everybody. And perhaps this is a learning. I'm pretty sure, Arvind, those 3 people that you generally find over the course of the year that are surprised are not surprised the next year. So that's always a positive. Thank you so much for taking the time. Always a pleasure speaking with you.
Thank you, Alex.